Here's your XRP recap from yesterday, just to keep you up to date on what's been happening. It was a busy day in the crypto world, and XRP was right in the spotlight. I went through the latest news from trusted financial outlets like the Economic Times, finance magnates, and Yahoo Finance, so what you're hearing comes straight from verified sources, not social media hype. XRP had an interesting mix of signals. Bullish headlines around institutional adoption and ETF filings on one side, and some technical red flags flashing on the other in short momentum, but with a dose of caution. Let's break down exactly what went on, what these headlines really mean, and how it could shape where XRP heads next. All right, let's get into the headline that kicked things off. Yesterday, we saw a major development for XRP, a jump in institutional interest buzz tied directly to ETF momentum. And we've got solid sources to back this up. According to the Economic Times, XRP's price surged more than 12% in 24 hours, hitting near US $2.58 before settling closer to US $2.40. That spike came after reports that 11 new XRP ETFs are anticipating launch, signaling institutional capital is starting to consider this token seriously. At the same time, industry tracking outlet CoinDesk reported that asset manager Canary Capital filed its final Form 8A with the U.S. Securities and Exchange Commission, a key procedural step before a spot XRP ETF goes live on the Nasdaq stock market. Once an ETF gives institutions regulated exposure to XRP, capital flows can change. The bigger money may start treating XRP less like a speculative play and more like a tradable asset in a portfolio toolbox. The jump in price and volume suggests that some of that shift may already be in motion. The market is smelling opportunity. But, and this is important, the mechanics still need to play out. Filing a form isn't the same as full launch, so while the signals are strong, the event isn't over. XRP is not just moving on its own fundamentals. It's moving because big players are potentially bringing capital through new instruments. That doesn't guarantee upside, but it dramatically raises the stakes. Keep an eye on when the ETF officially lists and how much volume it attracts out of the gate. Now, let's dial into what the charts are telling us about XRP. First, according to an article by Finance Magnates, XRP is trading around $2.43, and analysts are sounding alarms. A death cross where the 50-day moving average falls below the 200-day, signaling potential for approximately 50% drop to around $1.25 if key support around $2.30 to $2.20 fails. In parallel, CoinDesk reports XRP fell about 5.1% to $2.41 during the latest session, with heavy volume and large whale transfers breaking through support near $2 and $39 to $2.41. Here are some of the critical levels. Resistance sits roughly between $2.55 to $2.70. Break above here could shift momentum. Support around $2.38 to $2.41 is now the battleground. Lose that and the path down opens to $2.20 and beyond. Technical indicators are flat to weak. No strong bullish signals yet, just caution. What this means for you, if you're holding XRP, the support band near $2.38 to $0.41 is your line in the sand. If it holds, there's hope for stabilization. If it breaks, downside risk ramps up significantly. On the flip side, a real breakout above $2.55 to $2.70 accompanied by volume would flip the story toward revival and give you something more optimistic to work with. So bullish headlines are in play. But the technical setup right now is tilted toward risk. It's not a go big moment yet. It's a watch carefully moment. Momentum is a two-edged sword. While institutional signals give hope, the charts are reminding us that structure matters. The next move for XRP is likely to come from either a strong breakout or a significant breakdown, so keep an eye on those key levels. Let's zoom out for a moment and look at what the wider market is doing. Because even if you're focused on XRP, the broader crypto environment influences every move. A recent article in Barron's noted that the crypto market overall is under pressure. The flagship coin Bitcoin and several altcoins, including XRP, slipped yesterday amid signs that investor appetite may be turning cautious. According to MarketWatch, a survey of over 1,000 professional and high net worth crypto investors found that 61% plan to increase holdings, even though the short-term outlook is neutral to negative for 2026. And from crypto news, the global market cap dipped. Only a handful of top 10 coins stayed green, and the fear and greed index fell into the low 20s, signaling that many traders are waiting on the sidelines. Why that matters for XRP? If money is flowing out of crypto, even a strong XRP-specific story could stall or fade. On the flip side, if large professional investors are buying, there's a base of real capital that could support a breakout. The interplay between macro risk assets, stocks, bonds, regulation, and crypto sentiment means XRP's next move won't just depend on its own story, it depends on how the entire market acts. If you're holding XRP or watching it, keep two questions in mind. Is broader crypto sentiment improving, or is it still darkened by fear and liquidity concerns? When headlines for XRP drop, do they trigger flow or just flicker in a weak market? Answering those can help you separate a just XRP move from a market-wide move. In summary, XRP's story is strong, but it's not isolated. If the whole market is cautious, narratives need more than buzz. They need execution. So keep your radar on the meta signals, not just the coin-specific ones. So where does XRP go from here? After sorting through all the news and data, there are three main things to keep your eyes on in the short term. First, the ETF timeline. According to filings cited by Yahoo Finance and CoinDesk, the first spot XRP ETF is inching toward final approval, and the earliest potential trading window could open this week. If that listing happens, it could act as a short-term volatility trigger, up or down, depending on how much institutional demand shows up out of the gate second. Price structure. From a technical standpoint, that $2.38 to $2.41 support band is still the line to watch. Lose that level, and traders will likely test deeper waters near $2.20. But if XRP can close above $2.55 to $2.70 on strong volume, that's where sentiment could flip bullish again. As finance magnates put it, momentum without confirmation is just noise. And third, macro tone. The broader crypto market is showing hesitation. If Bitcoin and Ethereum can't hold ground, XRP will struggle to move independently no matter how good its headlines are. But if macro risk sentiment improves, and especially if the Fed hints at loosening, that could amplify any upside move. So for now, keep it simple. Watch the ETF approval date, the $2.38 floor, and the overall crypto mood. That's the trifecta that'll determine whether this current rally has real legs or just a short-term bounce. And that wraps up your XRP recap from yesterday. Here's the quick takeaway. Institutional interest in XRP is growing fast, with reports from Yahoo Finance and CoinDesk confirming that the first U.S. spot XRP ETF could be closer than most expected. That's bullish in the long term. It means Wall Street is watching. But in the short term, finance magnates and the Economic Times both point out the same thing. The charts are fragile. That support zone around $2.38 to $2.41 still needs to hold if XRP wants to stay on track. Lose it, and we could see another leg down before the next rally. At the same time, the broader crypto market is sending mixed signals. As Barron's noted, liquidity is tightening, sentiment is cautious, and investors are picking their spots carefully. So the key message here, XRP has momentum, but it's not bulletproof. This isn't the time for blind optimism or panic. It's the time to stay informed, stay disciplined, and follow the real data. Thanks for tuning in to your daily XRP recap. If you found this update useful, make sure to subscribe and turn on notifications so you don't miss the next breakdown.